Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your midday market update for Thursday, the 29th of September. Boy, this month has gone quickly. Do you see the trees in a forest or do you just see the forest? There's a saying that goes like this: can't see the forest for the trees. It's a reference to people who get so involved in the details of an issue that they lose sight of the big picture. If you're involved in the markets, it's easy to fall into the trap of just looking at the minute or the hourly charts, the half-hour charts or whatever, rather than considering the market as a whole. When you can't see the market for the minutia, it means that you're too deeply involved in the situation and you are perhaps focusing too much on the inner workings of the market and not enough on the big trends. With all this talk of the problems in Greece, defaults, contagion, and a host of other problems in Europe, it is easy for traders to get distracted and not see the forest for the trees. The most important element in trading, in my opinion, is the direction of the major trend for that market. It doesn't really matter what the news is, if the market is doing something else. As traders, I believe we have to look at the forest, in this case, the big trends in the marketplace. Let's look at them now. Okay, the S&P 500, the major trend is down. Gold, the major trend is still up. Metals, that's copper and silver, the major trend is down. Crude oil, major trend down. Dollar index, major trend up. And the CRB index, major trend down. So there you have it. All the major trends in all the major markets we're dealing with right now. Everything else is just individual trees that don't mean a heck of a lot in the big picture. It takes a tremendous amount of energy to move a market and change a major trend. This kind of energy normally does not happen in 1 or 2 days. As they say in statistics, one data point does not make a trend. Now let's go to the 6 major markets we track and update every trading day and see how we can create and maintain your wealth in 2011. Okay, as always, we're right at my home page, and I'm going to go to our portfolio manager, and you would do it right here to speed up time. I'm just going to go right to my portfolio manager, and here are the 6 markets we track. I'm going to close this up, and as you may see, I've got a lot of other portfolios here. The Perfect Portfolio, the World Cup Portfolio, and the Global Strategy Portfolio, which are all portfolios we track every day for members and give them the exact signals to trade on. We have inverse ETFs. We carry all the markets, about 200, I don't know, maybe 270, 280,000 symbols now. It's a tremendous amount of data. Plus, we've just started carrying on a beta version, the Australian Stock Exchange, which is really interesting because it's a very mineral-rich country, and of course, that means commodity prices have really affected some of their moves. So let's go to the first market. We're minus 75. We had a little pop today with the signing in Germany of some agreement, which is going to pay Greece some more money on top of some more money, which really doesn't make any sense, but there you have it. I'm going to go to a daily chart, and what I want to look at right today is, you can see, we'll go a little closer than that because it's hard to see, but you can see how we've had this kind of little pop today earlier on, which took the market up towards the 1180 level, and now we're down to 1158. And if you remember, we said the 1163, a close under that area yesterday, was negative. We think this is what's happening right now in this market. So let me just show you how we see this market. And we're, first of all, we're in a kind of like a rolling over type scenario like this. This is a lower high. This is a lower high than this high, and this is a lower high than the previous high. So we've had 3 and this is a lower low. So you have to determine that the trend clearly at this point in time is still, the major trend is still down. Our monthly trade triangle is negative, weekly is still negative, so everything is in a, I'm just going to say, a bear trend. And this is the support level right here. And that's 1120. Now the key here is we closed last month. We closed in this index around 12. I'm going to just pencil this in somewhere around, let me get this right. It was around, I'll give you the number anyways. It was 1,218 and 89 change. Okay, that was last month. That's last month. Now remember, tomorrow is the last day of the week, the last day of the quarter, and the end of the month. So it's all coming, colliding tomorrow. Last week we closed at 1,136 again, 0.43. Now we're currently trading at 11.58, so we're about 22 points above this area. Now, are we going to close down for the week? Maybe it's possible we could have a big down day tomorrow. Is that going to happen? That's something I don't know right now, but certainly if we take out the lows that we saw this day, which are around the 11.50 area, then that's going to be awfully hard for it to contain its downward momentum. But again, the key level in this market is the 11.20 area, which we talked about right here. If we see the market break through this area, we're heading to 1,000 and then to 950, in my opinion. So generally speaking, we talked about the big trends. The big trends continue to be negative, and that's the bottom line. So let's just see how that works out. I'm going to pass on spelling negative here, but it looks to me like we can see this market go lower. So let's go to our next market, clear everything off the screen. In the next market we're looking at silver, of course, and silver is just really not acting very well at all. Now look at the last 3 days. We've had these big legs in candlestick terms. This is a potential doji, which means there's a equilibrium between the buyers and the sellers. The sellers don't have enough power to push it down, and the buyers don't have enough power to push it up. So it's an equilibrium. But when we take a look at our trade triangles, we can see right away that they're negative, negative, negative on the daily, weekly, and monthlies, all negative. Now, if we look where silver closed last month, and I'm going to put this on the screen so you can see it very clearly. Last month, we closed at $41.60 an ounce. Okay, that's somewhere right around these levels right here. Okay, and here we are. We're all the way down to $30.60. Even last week, last Friday, we closed at $33.15. So again, we're down. The monthly, we're obviously down a lot in prices. Even on the weekly, we're down in price. Now, how far and how low can silver go? Well, potentially we could go back to the 2008, 2009, 2010 level of around $20 an ounce. Now, is that going to happen? I don't know for sure, but the trend is down, and it could well happen. We would lose about 30% of where we are right now on this particular spot silver, which means some of the miners would go down, some of the other markets would certainly be on the defensive. But again, follow the trend, follow the trade triangles, and don't listen to the news. It's too distracting and distorting of what really goes on in the markets. So let's take everything off the screen, go to our next market. The next market, of course, is going to be gold, which we have talked about. Now, gold is a little bit different from silver, and here's the reason why. In the gold market, and I put this, and let's just go to a 3-month chart, but if you look at this in gold, you've got our monthly, I'll put my telestrator on here, we've got the monthly positive, weekly negative, and daily negative. So those two are negative, positive the longer term. So the longer term trend is still, even with this pullback, this dramatic pullback from the $1,900 level to the almost, it's $375 if we're really counting. It's a huge break, but it didn't change the overall longer term positive trend in gold. Unlike silver, which is a totally different picture and is lower for the year, gold remains positive for the year and higher than it was in the sort of June, July period. So let's see how this works out. We're getting this very tight sort of doji. Is a battle, kind of like a battle right going on here between the bulls and the bears. How are we going to resolve this? It's too early to tell, but you've got a couple of things. The market is oversold. The major trend is up, and we're looking for a place to actually get long this market should we have the signal to get long. It's not there yet. And for the month, you have gold. Last month closed at, I'll put it right here, $1,823. Okay, and here we are trading at $1,620, so we're $200 lower than we closed last month. Not necessarily a good sign. And even for the week, we closed at $1,656 and change. So this was the weekly close, and this is the monthly close. And these are two things we watch very carefully at Market Club, is where the markets close for the week and the month. So here we are. We're still about $35 lower for the week. Not necessarily a good sign, but maybe we're seeing some stabilization coming into this market right around these levels. So let's clear this off, go to our next chart. And the next chart we're going to be looking at is going to be the crude oil market. And we've said this before. Again, we have a crude oil market, major trend down, intermediate trend down, daily up. Okay? And this market's really just mimicking the equity market. So the equity markets go up, crude oil goes up. The equity markets go down, crude oil goes down. But you're seeing some sort of standard, much like in the equity markets, you're getting this sort of base level. Oops, let me just write that in. You're getting this base being built right around here, and again, a retest here. And if this level is broken, if it is broken, then we could go down to the $70 a barrel level, which seems almost unheard of. But if things slow down and things don't get good, I think we could see this market still go potentially lower, as the trend pretends. They're both negative. The only one that's positive is the daily, which doesn't count for a lot in our work. So the other thing I want to share with you is this. In crude oil, you know, you can get so enamored with, you think all the stuff you read and hear about crude oil, oh, there's a limited amount. Well, things do change. And you have to see where this market closed last month. Last month, crude oil closed at, are you ready for this? $89.10 a barrel. We're currently trading at 83, so it's down for the month. This is the monthly. I'm going to put this as the monthly. And the weekly closed at $80. So last Friday we closed at $80. So we're actually up for the week, down for the month. Sort of a mixed picture, but nonetheless the trend is still negative for this market. It has not confirmed that we're seeing a change. We moved outside of the Donchian trade channels. We've moved back in to the midpoint. I don't think we're going to go much higher than this. I think we'll probably see this market move around. And again, if the equity markets, the S&P 500 goes below the 1120 area, which we've really talked about for quite some time, then you're going to see this market go below, break below this 78 area and move lower down to the $70 a barrel level. So that'll be good news for some of us who drive, and well, it's probably everybody in America. And let's go to our next market, and let's clear the screen off. And the next market we're going to be looking at is, whoops, I thought I cleared the screen up, but I guess I didn't, but let me just do that right now. Okay, and let me go back again so we can get a cleaner screen here. So let's go back to this, and then go back here, and there we are. And this is what we're seeing. This is in the dollar index. Now, the dollar index is actually pretty interesting because we've been talking about this. We look at this, the line chart, and you can see the market's moved up. It's still doing well. If you look to see where this market closed last month, and it's pretty telling when you look at that. And this is something you should do just as an exercise for yourself when you're trading. We had a close last month at 74. Right around here, 74.11. That was the close last month. These are all verifiable. Go into MarketClub or whatever and just look at last month's close at 74.11 on the dollar index. We're currently trading at 77.86. The breakout point we said it was at 76.10 on our breakout over these levels right around here. I think it was right about there was the breakout we had. But the market still looks to be in a bull market and still looking to go to the $80 to $81. So looking for $80 to $81 on the upside. Now for the week, the dollar index is actually down. It closed last Friday at 78.30. Now, can we touch that level tomorrow? It's possible. We're currently trading at 77.86. The euro, which we track as well, that doesn't look that good. It looks as though it's come under pressure later in the day, and depending on how that closes for the week and the month and the quarter, it's going to be very telling as to the next swing. So let's see how that plays out. But let's go to our next market, and let's take everything off the screen and just go to our next market. The next market we're looking at, of course, is the CRB Reuters Jefferies Index. And again, this market continues. I'll put a candlestick chart on. You can see it's trying to recover. We had two like doji lines. This is a kind of an equilibrium. Nobody wanted to push it down any further or push it up at this point in time. We had the pop. We've come back down. Now we're trading back up. I don't think we're out of the woods yet in this market. However, it is oversold. Our MACD line is still negative, meaning the trend is not up by anyone's imagination. So again, this is where the trade triangles are very, very useful. They're all negative, okay? So here we are for the month. I'm just going to put these numbers in for you so you can see where we were last month. And this is astounding. And when I look at the numbers, I was really amazed. So we closed last month right here, 342.49. That's a 4 right there. And you can see right now we're trading at 307, so we're down about 35 points in this market in just 1 month. Now for the week, we closed last Friday at 301.87. So let's say 301, almost 302. But nonetheless, we're higher for the week. We're up 5 points for the week, but it didn't change the trend. And that's the key thing to look at. The trend is your friend, and the trend remains two things. You've got all the triangles, negative. You've got the parabolic, which is right here, which we talked about before. The market's below that level. Plus you have your MACD negative. The only positive, potential positive for this market is the fact that the Williams percent R is a little bit oversold. Not to say it can't stay oversold, but that's where things are now. But hey, this is Adam Houston. I've taken a little longer than I expected to. I hope you enjoyed today's update on these markets. There's lots of things, but tomorrow is a really, really important day. It's the end of the week, the end of the month, and the end of the quarter. If anything's going to happen, it's going to happen tomorrow. So really stay tuned to the markets and every success. I'll see you tomorrow with an update at around 1 o'clock. Have great trading.